If your business is making income over a certain threshold each year, you are literally donating money to the IRS by staying a regular LLC. Most people do not realize this until it's way too late. Here's the part that no one tells you. Switching too early could cost you thousands, and switching too late could get you audited by the IRS. So we want to avoid both those situations. In this video, I'm going to explain exactly at what income level you should switch from a regular LLC to an S-Corp, traps and mistakes to avoid, and the real math behind why and when you should make that switch. Let's break it down. This question comes up constantly for entrepreneurs. Should I stay in LLC or should I switch to something a little bit more fancy like an S-Corp that I've been hearing about for all these years? Most people think this is a legal question. It's absolutely not. This is a tax optimization question. The mistakes I often see are people see TikTok and Instagram and they make this switch way too early, which causes them a lot of compliance headaches, thousands of dollars in additional costs, and it just makes no sense for their situation. Others wait way too long, many years have passed, and they've paid way more in taxes than they should have for those prior years when they could have made this new election and switch, and they would have saved tens of thousands of dollars. I see this all the time. So let's get factual and math-based. Let's start with the default setup when you first opened up your business. If you are a regular single-member LLC, the IRS treats you as a sole proprietor. So your net income, or what you earned at the end of the year, is subject to two things. One is federal income tax and the other is self-employment taxes. Self-employment tax is around 15.3%. This is for Social Security and Medicare. This self-employment tax is very costly over a long period of time, and this is the subject we're going to focus on to try and remove when we switch and talk about S-Corps. Now, S-Corps, they don't magically just make your taxes lower or what you owe lower. What it does reduce is self-employment tax that we just spoke about. Why does it do this? Well, S-Corps split your income into two things. One is salary and the other is distributions. With a reasonable salary or any salary, payroll taxes still apply. With distributions that you send yourself from your business bank account to your personal bank account, self-employment taxes do not apply to that portion. And that split is where tax savings comes from. So let's jump into the math. Real numbers, no fluff. Let's say your net income at the end of the year is $120,000, and let's say self-employment taxes is around 15.3%. Scenario one, you're in an LLC taxed as a sole proprietor, meaning all your business income goes onto your personal tax return, as we discussed. You net $120,000. Of that, you're paying 15.3% in self-employment tax. That comes out to roughly $18,360 in self-employment taxes. This $18,000 is on top of income tax as well. Scenario two, you are an S-Corp now. In this scenario, let's say you're paying yourself a reasonable salary of $70,000. Side note, reasonable salary is an important thing to know about. I'm making a separate video of that. You could check that out as well. But let's focus on the example. So if you're paying yourself $70,000 in salary, that means $50,000 is left over that you could distribute to yourself out of the $120,000 total. Now, since the salary is only $70,000 as opposed to $120,000 in the prior scenario, you're going to multiply 70,000 times the 15.3%, which comes out to roughly $10,000 that you owe in self-employment taxes. If you compare the $18,000 and change to $10,000 and change, you're saving roughly $8,000 every single year on this strategy just off of $120,000 net income. Now imagine your net income is $500,000 or $1 million or millions of dollars. Now, what are the sizes of the savings that we're talking about? This is why this strategy is so powerful. Now, before you run tomorrow to quickly switch over to an S-Corp, we're going to subtract a few costs and things to keep in mind to make sure the strategy makes sense, and this is the time to do it. One is paying for a payroll service online. Two is tax return complexity. The cost to file this for your CPA is going to be a little bit more than it was when you were a regular LLC. Three, accounting and compliance fees. It's also a little bit more since it's a little bit more advanced of a strategy than a regular LLC, which is easier to file. So on average, the cost to switch is roughly $2,000 to $3,000 more So you want to make sure that the savings from this strategy is higher than the costs to switch from a regular LLC. Okay, so David, what income threshold makes the most sense? Just give it to me blank point period. Here's the honest CPA answer directly from me. An S-Corp starts to make sense in these conditions. 1, your net profit starts to become anywhere from the realm of $80,000 to $100,000. Start to think about making that switch. 2, your business income is consistent. You know you're going to make at least this much, if not more, the following year and the following year after that. 3, you are actively working in this business. This is your bread and butter, your full-time job. This is something you're going to continue to grow. Below that, the juice isn't really worth the squeeze. Above that, you're leaving tens of thousands of dollars on the table, depending on how much higher your net income is from that $100,000 mark. Let's also quickly talk about the quickest way to mess this entire thing up. What I referred to earlier, reasonable salary. You simply cannot pay yourself a salary of $20,000 if your business is earning $200,000. It just doesn't make sense. And the IRS doesn't care what TikTok or anyone on Instagram has to say about it. So keep in mind, that reasonable salary has to be a reasonable rate, a market competitive rate that you would pay if you were hiring somebody else to do that same job. That's the point of a reasonable salary. You should not do an S-Corp if these few things apply to you and you're on the fence, you're not sure. You shouldn't do an S-Corp if 1, your income is inconsistent. 2, it's just a side hustle and you're making under $50,000 a year, you should not do it. 3, if it's passive income only, do not make it an S-Corp. 4, you don't want the extra admin work, the headache of dealing with a little bit more advanced of an entity and strategy. If you don't want to deal with it, do not make this switch. Here's my pro tip for you. The best S-Corps are planned in advance. Do not wait until December. You have to elect S-Corp status before April of that year. So plan in advance, make sure you know how and why you're doing it, and then execute. Do not wait until December to make this decision. So guys, if you're wondering if you should or should not switch from an LLC to an S-Corp, the math never lies. Do the math that we discussed, but for your business. If this helped you, please like and subscribe. I break down simple, basic tax strategies and wealth advice. No BS, no fluff. I want you to grow your wealth. Also, if you have any questions, comment down below. I personally will answer you directly. Appreciate the support as always, guys, and I'm going to catch you in the next video.